If you look at AMC stock today, and if you go back to the first quarter that ended a couple of weeks ago, well, the stock is down 34%. But I'm going to share with you in this video a new research that is actually showing that even though the first quarter stocks in general, stock across the board ended in the red, lower than what they were in March 31st, there is actually something pointing that they may potentially have a strong reversal coming later in June. And definitely AMC will not be an exception to that. So let's get into the details of this new research. First off, if you look at so far this year, AMC is down 34%. If you look at, you take the Russell 2000, for example, year to date, it's down 12.5%. And if you go with other indexes like the S&P 500, it's kind of also the same thing, 8.5%. We're talking about a big deal here. This is, obviously, even the NASDAQ is even worse, almost 16%. So stock are clearly on. I've been in the downtrend at least so far since the beginning of 2021, which is not surprising because we had a stellar 2021 year in the market. And also when it comes to AMC stock and other sister stocks such as GameStop and the other kind of meme label stocks. Now, what does the research say exactly? Well, the research says that the structure of the stock market may change, and this will point to a reversal by the end of June. So the research was conducted by Vincent Delord. He's the head of global microstrategy and investment firm StoneX. He didn't look at what is happening in Ukraine. He didn't look at the price of oil. So he looked at the fundamental changes to the structure of the capital markets. And there is one big effect of those changes is that the bad quarters are more likely than not to be followed by good quarters. Pretty much, it's another way of saying in simple language that, well, people are going to be pricing some of the risk we're seeing now and definitely buy the dip. And as we buy the dip and those risks starts to fade away, then the market will then continue its run up that it started years ago. Because if you look at the market, ultimately the market always tends to recover. Now, this is good for AMC holders. Why? Because this is one of the highly shorted stocks in the market. So if this buying pressure is coming up, all right, from the broader market, it means it doesn't matter if it's on the tech sector, it doesn't matter if it's on transportation, it doesn't matter if it's from the energy, it doesn't matter if it's from food, it doesn't matter if from services, it doesn't matter where the buying pressure is coming from. If it's all across the board, the short sellers are kind of doomed. Now, let's look at some other catalysts that may be adding to this new research and pointing towards this kind of June theme. All right. First off, if you look at the buy ratio on AMC stock, you will see that on a day like this, for example, where the stock closed at 3% on the red. Of course, the market was kind of flatly red, but still, it doesn't explain why for the last 5 days the stock has been down 3%, or the last month, it's been up 10%, where it should have been up more than 30%. Why? Because people are not selling. I mean, majority of people holding AMC stock. Look here, AMC in a 14 position here, you can see that we still have a kind of a buy to sell ratio around 2-1. So we have 2 people buying and only 1 people selling if you take into account all the orders coming into Fidelity. So people are still not selling. But why is the share price dropping then? Well, we know because of dark pools and dark pools and dark pools. Majority of our orders are not even reaching the place it is supposed to reach for the price to continue to ride. Because if nobody is selling, the law of supply and demand will literally send the price higher. But maybe that's why the SEC, not maybe, that's why the SEC has been looking closely at dark pools. Here's what they are and why regulators are rallying. We know also that the SEC has the power and the obligation to suspend dark pools because these orders are not triggering the lead exchange, which is kind of against, this whole law supply of demand in the market. All right. So that's number one. Number two, we also have what may happen in Ukraine. If the war is definitely having a major impact on the market, then yeah, it kind of makes sense that as this kind of fades away a little bit, or whether it doesn't fade away or no, people will then be accustomed, more used, and the market will price this in so that it wouldn't be a major risk as it was because people already shifted the way they invested the money. Or maybe it could be earnings. I shared with you on another video, that earnings definitely, if you look at where AMC is sitting now, earnings are looking quite juicy. Just because the numbers around the box office are definitely better than what it was last year, with the bangers such as Spider-Man, the bangers such as lately Sonic the Underdog 2, and bunch of others that I'm not mentioning here. This definitely adds to another catalyst, because just by thinking of how cash flow the earnings can bring to this company, it will definitely be another way of attracting the value investors, which are looking to invest in an environment where inflation is still very, very high. So also, to end, inflation might be the one or the other catalyst that, well, by the time we get to later June, then yeah, it may start fading away a little bit, and interest rates with it, but that will be the another discussion we'll have, all right? Because that is a little bit tricky when it comes to inflation and kind of predicting whether it has peaked or no. And finally, I also shared with you yesterday something that was pointing towards what we call the Fibonacci retracement. The Fibonacci retracement is actually a technical indicator that shows you the lows and the high on a specific time frame on the stock. And when you take it exactly, and what happened similar to June 2021, where we ran from, I don't know, from 5 to all the way up to 72, it points out towards maybe a $255 a share. So if you add everything I just shared with you here, plus this new research around where the stock market could be around June, then yeah, it kind of makes sense to expect a reversal might come. But as always, remember that it's not because it looks like something's going to happen that it will mean necessarily that something's going to happen the way we think, all right? Because nobody can predict the future. It simply means there are high chances that we haven't seen the highest price of AMC so far this year, but as always, we have to hope for the best and also be prepared for the worst in case that doesn't happen when we want it to happen. But until then, personally, I will choose to remain really, really, really holding tight to my AMC shares.